Hey, Ian, another edition of a cast named after you, the Ian cast.
Yes, welcome.
And you know what everybody's going to want to know. Hey, Paul. Hey, Ian. What
Yeah,
is going on with the stock market? And we had a perfectly timed investment meeting yesterday, and we talked about this. So you go first, and then I'll add a few things on top of
yeah. So yesterday, as I'm sure everybody noticed, the stock market was down. The big indices like the Dow and the S&P were down like 6%. So it's kind of it can be unnerving when you see the market down that much in one day, especially after March, which we saw that a lot. So yeah, understandably, a lot of people are worried, but I want to kind of try to put those fears at ease. And so one of the big things that people don't really follow too much, that could be one of the big reasons why the market was down so much yesterday, was that coming up next Friday, we have what's called a triple witching in the market, which is when futures expire, as they do every month, options expire, and the options on futures expire all on the same day. So a lot of big activity going on in derivatives, which is like a multi-trillion-dollar industry. A lot of people buy futures and sell futures all the time, same with options. And so that can have a big impact on the price of big indices like the S&P 500, as well as bigger stocks like Apple and Microsoft. So when a lot of people have a lot of futures contracts and options contracts outstanding, they're basically betting on the stock market being at a certain price by expiration. So when you have the market go up like it has so far over the past couple of weeks up until yesterday, people are ready to take profits. So when you have all those people selling the futures and selling their options, it can really drive things down. Just like when you have people buying into those things, it can drive things up very, very quickly. A lot of big institutions use futures to hedge their positions, so they could have huge, multi-million-dollar positions in this that they clear out all at one time. The S&P 500 futures, for example, is the most liquid, most traded asset in the entire stock market, futures markets, etc. So it's a really, really popular thing that people buy, and a bunch of people just happen to sell it ahead of this triple witching date, which is the third Friday on the last month of each quarter. So it happens in March, June, September, December. We're always looking for big moves around this time because it's not uncommon that you get a lot of people buying or selling their big futures positions to roll ahead and buy whatever the next expiration is that they want to buy, which is probably September. Like I said, this can have a really big effect on prices when a lot of people are getting out of that at once.
Right. And then, as you said, you combine it with the fact that it's been a straight up, market since March 23rd or so.
Right.
And I know from managing large amounts of money that one of the ways that you can get a lot of money into the market is to buy into a futures contract, and then you would sell the futures contract as you built actual exposure in the particular stocks that you wanted. So there's a very natural dynamic that's there. And also, if you wanted big exposure into any single stock, the option markets are a way to get in. And all of that's got to be balanced out at the end of certainly every quarter, because people's books are marked to market for sure daily. However, the quarter end matters because many companies have to report publicly, and so that puts pressure on people to close positions out. And as you said, there's the time pressure of like, hey, I'm going to take my profit now. I'm not going to wait till next Friday. I mean, no one's going to wait until the very last day or even the day before. And we've seen this before or after any sort of like big move. There's always sort of counter volatility relative to the direction driven by this triple witching action. And given the size of the move, the violence of the move, it's kind of like something that was on the cards one day or the other, which is that we've seen even the Dow, in which is filled in, and from our perspective, people talk about like junk bonds, but
Yeah.
a significant part of the Dow is full of junk stocks.
Yep.
I
Yeah.
mean, well, what stock would you own in the Dow? I'm really struggling to find like a stock that I would own in the Dow. I mean, is there one that we would
I
own?
agree. Yeah. No, not I don't think I've ever owned any of them that are in the Dow.
Yeah, I mean, and I have gone through this in my mind as to what 30 stocks, like And I just put this tweet out. Well, you might as well plug our Twitter accounts while we're at it. You go first.
Yeah. So I'm at Ian Dyer Guru.
And I am at Mampilly Guru. I put it on Twitter that, in 5 to 7 years, the entire Dow is going to be remade. And, to me, that's completely clear because half these companies are going to be so shrunken. And some of them will have been merged down as a result of weakness. A few will have gone out of business. And you can see, go back, I don't know, we can perhaps get like a chart, go back to the year 2000. I think I tried this on you once before. Guess what the top company was at the top of the 1999-2000 bull market? What was the highest market cap company?
I want to say it was one of the big oil companies or big banks.
Nope, it was General Electric.
Oh, got it. Yeah.
It was General Electric. And where is General Electric today, Ian?
It's, way down.
Right. And what was the top company in the Dow in terms of market capitalization at the top of the 2007 market?
I'm going to go with Exxon.
That's right. And where is even Exxon today?
Yeah, way down.
That's right. So, and we're in a period of even more change. In other words, there's really been this America 2.0, which many people accuse me of making this up and it being hyped. However, it's very, very real. There is a definitive fracture between America 1.0 and America 2.0. And this whole crisis period has really made that very, very, very clear.
Absolutely.
Yeah.
Yeah. And so a lot of those companies that are being disrupted are still worth like hundreds of billions of dollars, which is just kind of fodder to feed the smaller companies. When people sell out of the ones that are being disrupted, over time, they're going to buy the ones that are disrupting them and end up taking that market share. And it's also going to take the market cap of those companies. So you've got a few companies worth $100, $200 billion, and all these other companies that are growing like crazy, disrupting them, that are worth like $5 to $10 billion. Those are going to even out over time.
Yeah, there's an enormous shifting of market capitalization that is going on right now from America 1.0 to America 2.0. And I find this, I don't know if irony is the right word, but I find it awesome for our readers, which is that this is a market that is sort of really almost like the big money can't play because some of these companies are so small and they had so much money, they have to wait until Main Street investors, our investors, Profits Unlimited subscribers, our subscribers across their services, come and get the benefit of it, bid it up, and then they can come with their billions and come and participate. However, I don't know, maybe for the next 3 years, maybe even 5 years, this is a Main Street bull market. This is for small investors, regular investors, mom and pop investors, whatever you want to call us, Main Street America, regular Americans. This is for you because these companies are so small. For the most part, the big money cannot play.
Exactly. So a bunch of those smaller stocks, like, I don't know, 5 billion or less in market cap are, they trade maybe 10 to $20 million a day, like at most. So if you're like a big hedge fund or something and you have billions of dollars and you want to put like $10 million into a stock, then you got to like either wait or spread that out in really small amounts. So you'll see the buying effect over time, but if they tried to buy in all at once, it would make the stock go up like 100% in a day.
It's part of that pouring down effect. In other words, like many of the companies that our readers have now owned for many years slowly are going to start to become multiple $100 billion companies. And at that point in time, these the big money investors can finally now start to put 1 or 2% into it. And as they come, they will bid it up even higher.
Exactly.
Bid it up even higher. So many people, on Twitter are sort of amazed at how, Ian, we have stayed BOP, which is the hashtag that has come to define us.
Yeah.
Bullish, optimistic, positive on Twitter through obviously what was a brutal crash, no question about it. However, the underpinnings of the America 2.0 bull market never changed. It never changed.
Exactly. Yeah. Companies are still out there disrupting. A lot of them are starting to come public. A lot of those really disruptive companies are still private. So this is just going to feed the market even more as these really, really important high growth disruptive companies start to come public too.
Yeah, so while we're talking about that, so if you want a portfolio of just America 2.0 companies, which are actively changing life in our country and around the world, and will continue to change it for the next 5, 10, 15, until they totally dominate our country, our society, our economy. Well, click on the strong hands above. That's going to take you to my America 2.0 presentation, which lays out this entire case for you and invites you to subscribe. Profits Unlimited, the annual subscription rate for the first year is $50. And I believe right now we've got about 40 stocks, and this is exclusively focused on America 2.0 stocks on the Main Street bull market that is going on right now, that excludes the big money and is been made specifically for you, So if you want in, please click on that strong hands above, and that's going to take you to my presentation. And just to end this, in other words, every time I see the Dow futures being used by the media to scare people, and I put this out yesterday on Twitter, I said, if you want to feel less fear and panic about your stocks, stop looking at what MarketWatch is saying, what Yahoo Finance is saying, because their business model drives off fear and panic. If they can get you to click, that means higher click rates for their ads. And so the media and what they represent today is completely different from 15 or 20 years ago, when the media's primary role was to inform. Today, it is obviously for them to make as much money as possible, and then it is also to push their point of view upon you, which then feeds their business model as well. In other words, simply really continue to put things out. They no longer form a public service of any kind.
Yeah, not at all. Probably the opposite, actually.
That's right. And so, they don't really care if you sell your stocks and then 1 year out, if these stocks are much higher, you end up losing. For them, they will go on to the next crisis, whether it's real, whether it's unreal, whether it's true or not. If there's enough of a semblance of it, they will do it, which is why people say, hey, Paul, how can you stay BOP through all of this? It's because the underlying facts, which are in America 2.0, Ian, which are still there. I mean, what's changed between, Wednesday and Thursday?
Nothing. Absolutely nothing.
Right. Nothing. So if you're in, the only thing is that clearly a number of people were stimulated to sell. And when people come in large block sizes to sell their stocks, well, you are not going to get the price that existed prior to that order existing. If somebody comes with 20 million shares and says, hey, I want instant liquidity, no different than a vegetable market, fruit market, flower market. If you have 1,000, bushels of wheat to sell and you want instant, the price is going to be lower. And reacting to that is generally a poor idea. There's no reason to go along and simply take terrible prices because somebody decided that they want instant liquidity.
Right. Yeah. And when people also are long the futures, the market makers have to short the stock, the underlying stock, in order to balance their position out. So when the big fund managers go to sell that, the market makers are getting rid of their stock too. So they're actually providing more supply for the market, which of course drives down price. So that's kind of like the underlying mechanics of how all that works.
Yeah, I mean, it's, and of course, like that is translated by the media into some headline.
Yeah.
Something exactly about, whether it be viruses or what, Chairman Powell said or Trump's tweet. However, underlying it is a very basic market activity, which in other words, someone perhaps that called the bottom and has massive gains, sees the quarter end coming and says, I'm going to book some profits. And I'd like to take my liquidity all at once and go on vacation for the summer or whatever the case may be.
Right.
When they come to take it, well, they put a big block order in, they get lower prices. And they can use the futures market to sort of use that as liquidity. Sell a futures contract and then over the next sort of, maybe month or two, slowly sell their stocks out one by one. And now, they've got their exposure out. And so many of our folks who have not been in the markets for very long will not necessarily understand some of these dynamics.
Right, exactly. But it's really important to know. So we talk about that a lot because, like you said, you don't see that on MarketWatch. You don't see that on Yahoo Finance or CNBC. But that's really what's going on behind the scenes, just like the basic market principles.
Yeah, and they might even have active interest now today and hide that from you and have you believe really whatever drama story that they would like. All right, we've done the market, and to make it clear, we are still bullish, still optimistic, still positive. We still believe that America 2.0 stocks, America 1.0 stocks, truthfully, you're on your own. And I want to mention that if you subscribe to Profits Unlimited, we actually give you a list of America 1.0 stocks that we can tell you that, their business models, their products, their services, the people that buy from them, this is all either fading away or going to zero slowly or surely, slowly and surely. That's for sure. As I like to say, the destination is certain, only the speed is unknown. So we're still bullish, still optimistic, still positive on America 2.0 stocks. Let's do Bitcoin now, Ian. And do a regular roundup for Bitcoin, Tesla, and cannabis, and then close this out. All right, so Bitcoin, again, there seems to be more, I guess because of the fact that there's Bitcoin futures, there seems to be more linkages between now the stock market and the crypto market.
Yeah, for sure. So, for example, yesterday we saw the stock market fall. Bitcoin also went down. The same thing happened back in March. So yeah, there does seem to be a little bit more of a correlation there. But something else that I've seen that's a positive for Bitcoin and crypto in general is that it's kind of like the stock market, where we've said before, if we see the small stocks start to go up, it's a good sign because people are willing to take more risk bidding up the smaller stocks. For crypto, it's really similar. So there are these tiny altcoins, which a lot of them are basically like very speculative penny stocks, very small companies. But recently, I've seen a lot of these go up like 30, 50% a day. There's a lot of action going on behind the scenes in crypto, not just the big ones like Bitcoin and Ethereum, which are also looking good, but these other really small ones, some of them are up like 300, 500% over the past couple of weeks. So that's a very good sign to me. It shows that people are willing to buy up the smaller ones. They're bullish on crypto. The same thing happened at kind of the same scale. I haven't seen it happen this much since April or March and April of last year, when, of course, Bitcoin made that big run from, I think it was 3,000 to like 14,000 within the space of a couple months. At the beginning of that, we saw these tiny altcoins start to go up like really fast. It was kind of weird because everything had been crashing for a long time. So to see that activity was really positive. And then Bitcoin followed through with that huge like 300, 400% rally. So that is, I think that's still entirely possible for this year. I think the second half of the year is going to be huge for crypto. Bitcoin, still think it could hit 50K this year. Once it breaks above 20,000, the bullishness is going to just be off the charts, just like it did when it broke. I think it was 2,000, 2,500, whatever it was the last time it broke its all-time high. It went all the way up to 20,000. So, once it breaks 20, 50 is like right around the corner.
100%. I would also say that I believe that one reason some of the the altcoins are moving is that it's taking forever to get a transaction done on Bitcoin.
Right.
I mean, because and then that's completely predictable post the halving, which is that the reward has been halved. As a result of the reward being halved, what happens is a bunch of miners are the more marginal miners that really as soon as they mine the Bitcoin, they sell it. They're out of business. They're gone. And now a whole set of new miners are going to have to come into play based on the new economics around Bitcoin. And so the fees are going to run up. The price is going to have to run up. And for sure, like I feel like, just like we said, hey, Tesla was going to hit $1,000 this year, and people told us we were crazy. I feel like that's a total no-brainer, because the nature of Bitcoin or crypto demand is it has a different I don't know what the right word is. It's a different structure to equity markets because the vast majority of Bitcoin, vast majority of crypto has truly finite supply.
Yep. And, crypto also has a way smaller market cap. So as of a couple days ago, when I worked this out, the entire market cap of all crypto, excluding the top four, which is Bitcoin, Ethereum, XRP, and Tether, which is basically the US dollar version of a crypto. It stays at $1. The whole market cap minus those four was $48 million or $48 billion, which is like a quarter of Tesla. So in the entire crypto market. So, it's not going to take much for these to really run, for Bitcoin to run. The entire crypto market, even with those four, is still like 250 billion, around there. So it's so small. It's not going to take too much for it to run up. I mean, it was over 800 billion at the top of the 2017 bull market. So as of now, things are still so cheap there. It's such a small kind of asset class, if you want to describe it as that. It's like the size of, a big bank. So it's still incredibly small. It will not take much once it gets going to really run up way higher than it is now.
And also the altcoins going up are very much in line with the way that I've experienced other bottoms come through. In other words, if you go back to March 2009, because liquidity can affect smaller companies in a much more significant way, that's often the signs of a bull market, which is that money pushing in, well, even a small amount of money into an illiquid altcoin is going to run that higher, which is why you're seeing, there's one. And then, of course, then that creates additional demand from other people seeing that demand to either buy that same altcoin or to find like, well, what's the next one? And that sort of waving effect is the essence of like a bottom being formed and a new bull market. And that then starts to spread out from the edge on from small to big and keep pushing out everywhere. So every sign that, I feel like 20,000 is pretty much right around the corner.
Yeah.
And people's like, really, Paul, do you really think 100% gain in Bitcoin, is right around the corner? Yeah. I mean, I actually believe that.
Right.
I believe that when it happens, people will be surprised. We certainly will not be surprised because we think that Bitcoin is going to go to new highs this year. 50K, I feel, is a very solid target for Bitcoin overall. And last thing to say, which is that people keep writing in to ask me about gold, and I want to say that Bull Profits, which is our sub-publishing company within Banyan Hill, so we are a Bitcoin shop. There's other people that like gold. I mean, we are completely into crypto. For us, that's part of America 2.0. Sure. And for us, gold and precious metals are very much part of America 1.0. And from our perspective, crypto represents, Bitcoin represents the sort of America 2.0 digital alternative to gold. It has established itself, I believe, without question, as the store of value around the world, replacing gold.
Yeah. So store of value is getting to be a way more legitimate claim. Grayscale and Square Cash, we were just talking about this. They're buying like half of the newly mined Bitcoin. Clearly, they're seeing some value in it, and they're selling it to, the Cash App is more retail. So there's really, over time, there's really no reason I think it can really go down from here, in a big way, in a sustained way. It moves quick up or down on a daily basis, but ignoring that short-term noise, I think overall, there's really nowhere to go for it but up.
I want to quickly mention, in Profits Unlimited, we've actually tried to give, because the vast majority of people do not want to mess with crypto. The taxes are complicated. To open up separate accounts, people don't want to deal with it. So there's the Grayscale has 2 stocks, and we have put both Bitcoin and Ethereum into the Profits Unlimited portfolio. So that's part of what you get. All right, Ian. So let's move to Tesla. And Elon, I've noticed, is, I think, in a much better place than really in the last couple of years. I think that Falcon 9, getting to the space station was such a huge burden off him. 18 years worth of work, and obviously the safety of 2, American space heroes, in his hands. He would have been held responsible. And so I have, and then Tesla hitting $1,000 as we had anticipated. And I believe even bigger gains are coming for Tesla come year end. I don't know if it's going to get to 2,000, but I feel like, it can go higher than 1,000 for sure. And he had an announcement about the next leg.
Yeah, so we were saying it would hit 1,000 back when it was like $180 or whatever it bottomed out last May at. Everybody, it was crazy how bearish people were on this like really incredible, unique company that had basically a huge market share, basically a monopoly in the U.S. on electric cars, on automated software, on batteries. So it was a tough ride for a while for Tesla, but now it's finally, reality is starting to set in the stock market that this is a legitimate company. They're not going to go bankrupt. They've got a great electric car business. They've got a great software business, autonomous software. They've got a great battery business. So the Model Ys are being delivered now. They just announced that there's huge development in their semis, on their semi-truck, which would be the first all-electric semi-truck on the road. So that's huge, with the trucking industry. And they, of course, have their Cybertruck coming out next year. I think they said late 2021. And most importantly, the whole lockdowns didn't really push back their business at all. It didn't really delay anything, maybe by a week or two. But in the big scheme of things, they have been on it. They haven't been really affected by this. So we're going to see their numbers continue to be strong. I think their stock is still, has major upside from here. So Tesla overall still looks great to me.
Yeah, I mean, and as you said, so I mean, and then the battery business, the car business, the software business, the solar business, all, I mean, I've been getting invitations to put what their battery pack is called. I forget.
Powerwall.
What's that? Powerwall.
Powerwall.
That's it. And I stupidly installed a solar, and I didn't wait another year, so I've got a battery from another competitor, and I can tell you that I really wish I had solar, the Tesla product, because it actually allows you to use the sunlight as it's generated versus what I currently have, which is a pure storage solution. And so I believe that the take up there is going to be huge, and no one really talks about that, or the fact that I believe that their autopilot software is probably 1 year away from them being able to, at least on a small scale, start to introduce their robo-taxi business.
Oh yeah, for sure. And that's going to be another industry that they're going to be like the first mover in. So that's even more great news for their stock, especially.
Yeah. So, I mean, $1,000 is now here. Yes, I know that it's under $1,000 today. However, we have little doubt that it's going to go back over 1,000 and then continue to go back up. All right. So Tesla, everything is really doing extraordinarily well, and EV demand, everything I see is actually accelerating. So it's everything is lining up for Tesla just right. Let's quickly do cannabis. We haven't kind of covered it in a bit. We've seen a lot of those small stocks catch a bid, kind of like the same thing we were talking about with altcoins in the crypto market.
Yeah, exactly. So this past earnings season, we saw a lot of stocks in the marijuana industry go up. Of course, they were hit kind of hard yesterday with the overall market. A lot of the smaller stocks, when a shock comes to the market like that, get sold off the most. I think that they're still going to rebound. They're still not anywhere near where they were in March at the low. I think that was the all-time low, especially for MJ, which is the ETF that I've recommended before. Still a great time to buy into that. We're finally seeing, solid demand for these marijuana stocks for the first time in over a year. And last month, April was the first positive month for MJ in like 9 or 10 months. So it was kind of a crazy run there. I think the bottom's in. I think peak bearishness hit a few months ago in these stocks when they were, kind of got caught in trouble trying to expand too fast. A lot of those companies have since restructured their whole business in order to stay salient, to stay alive, really, which kind of set things back in terms of sales growth a little bit. But we're still seeing a lot of them, grow 30 or 50 or even more. Some still over 100% year-over-year growth. So they're still strong. None of them really failed. I haven't seen many marijuana company bankruptcies at all. So that's kind of surprising. shows that there's demand for their products. And in turn, we're going to see demand for their stocks as people continue to see that, there is a legitimate business here in a lot of these companies, that they're not going to go out of business. That's the first thing people need to see. And then after that, people will see the momentum that's going to come into the stocks, which of course will drive even more momentum and more buying going forward.
I have nothing more to say to that. We're still bullish on cannabis, and I believe it's going to be a massive bull market for that as well as part of the America 2.0 sort of movement. In other words, market capitalization, from wine, beer, spirits, cigarettes, starts to flow into cannabis. All right, Ian, we have gone on for a while with the Ian cast. You say goodbye, and I'm going to wave everyone goodbye. We'll have hopefully another one of these next week.
Absolutely. Yeah. Everybody, happy Friday. Have a great weekend and stay safe.
Now, before I leave, I say, hey, subscribe to our channel, give this video a thumbs up, comment below on anything that we said. And this is Paul saying bye.